you say there's basically a perfect storm of events and trends that are resulting in this rush to market. Can you talk about that?
Yeah, well, I think a lot of people forget that 2017 was supposed to be the year of the decacorn, and it didn't quite materialize. And a lot of these companies, the decacorns that we talk about, were sort of having a wait-and-see approach. The IPO market can often be reactionary like that. And so they sat and waited to see what was going to happen. 2018, in turn, ended up being quite a nice year, which spurred a lot of these companies to get going. And it takes a little while to put that timeline together. And so 2019 just kind of ends up where they ended up. Combine that with a bit of an acceleration of timelines from several companies that I'm aware of that were originally looking at 2020 and 2021 and decided, the devil you know is better than the devil you don't, and also ended up here in 2019.
What about this issue that Leslie's brought up now a few times with regard to Lyft, but has certainly been an issue for others, the dual class structure? Do you think that the idea that investors won't get the full voting power will actually be a sway for demand with some of these IPOs?
I'd be surprised. I mean, it's certainly controversial now in certain circles, certainly in the Twitter sphere, let's say. But, I mean, it wasn't that long ago where this wasn't that controversial. So certainly there's evidence for and against it. But I'd be surprised if it ended up impacting the IPOs that we're talking about here, these decacorn IPOs. I mean, it feels like there's just so much excitement around them that this is more noise than substance.
We know that the private equity venture capital still have a ton of dry powder. Does that mean that the urgency is lessened as they come to market to blow it out of the gate?
Yeah. It definitely is. I think that these companies will continue to be in a bit of wait-and-see approach to see what happens. We need the first couple to perform well when they come out of the gates, or the others could very well sit on the bench. There's no real pressure for them to come. The traditional pressures for IPO of raising that significant round of capital to get you to that next level of the company's existence is no longer there. They all have so much money. And even if they don't, there's still an abundance of capital in the private markets, to your point, that they could very well just wait and see.
The whole Lyft Uber debut, I mean, it marks a new era for public companies and ride sharing. How do you expect it to go?
So these companies all have these sort of, let's say, key success factors when it comes to generating buzz around an IPO. Incredible revenue growth. Massive brand recognition, wide consumer adoption. So they're going to generate not only excitement from the Wall Street sophisticated investors, but also they're going to get people from Main Street that maybe don't normally invest in IPOs to also get involved. So it's going to be, I think it's going to be a circus. I think that both of these are going to generate excitement like we haven't seen in a long time.
Yeah, well, we've seen some reporting about the number of millionaires that are about to be minted, especially in the Bay Area. I wonder, what do you think happens to all the exit money for the people who've been in these names for years? Where does that money go?
Yeah, I mean, that's a good question. And I'm not ready to necessarily start guaranteeing that we're going to have tons of millionaires out there just yet, right? IPOs markets are fickle, and you often see IPOs not quite evolve the way you think that they're going to be. But, if they do end up happening, you got to imagine the housing market is going to get tricky, like everybody's sort of talking about at the moment. But, that's a tough one. Hopefully, what happens is we see a lot more startups, and we see that next tranche of future unicorns and decacorns come out of these companies that have the employees that have been, let's say, released from their handcuffs and can now get out there and start that new batch of exciting companies.
And then there's Levi's, which is not a startup. The 166-year-old jean company comes back to the public market. What do you think that says about this environment?
Yeah. I think it's further evidence that 2019 is set up to be this exceptional year when it comes to IPOs. I mean, not only is the market seemingly receptive to your exciting hyper-growth startups, but it's also receptive to 160-year-old companies that maybe aren't growing like crazy, but are generating pretty exciting profits. So it's not just about growth, but also can have a lot of different ways to sort of set yourself up for a successful exit.
Your best advice to CEOs who've run a private company and are about to be launched into public life?
Well, I think it's always best to be ready, because you never know how these windows are going to evolve. They can be quite fickle, and we've seen them slam shut before. It wasn't that long ago. I mean, we're talking only a little over a decade ago when the windows slammed completely shut for everybody. Now, those kind of events are few and far between, but they do happen. And I think a lot of us that were around here back then still may carry some of those scars. And so I think just being able to get out when the timing's right for you is key.